Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, April 6, 2021. What we'll do in this video is I want to take a look at gold and the gold mining stocks. So we'll look at gold, silver, and we're going to start out with the currencies because gold is dollar sensitive, being that it's priced in US dollars, at least the gold we're trading in the US, and many of you abroad even, depending on, of course, where you're trading it, but it's simple. If the dollar drops, if it goes down, let's say 10%, it's going to take more dollars to buy an ounce of gold, so the price of gold goes up. And likewise, if the dollar is strong, it takes fewer dollars to buy an ounce of gold, and so that is why you have that correlation. It's not magic; it just works that way. And so that's what I want. I always like to align any bullish or bearish outlooks on the gold with the outlook for the currencies as well. Make sure they mesh. And what we're going to do in this video, a little different, I promised you a few weeks back and I didn't do it, is I'll take a look at some of the individual gold mining stocks. So let's just dive into this so we can get to those. So we'll go in this order: currencies, the US dollar and the euro, then look at gold quickly, and then some of the mining stocks. All right, DX, this is a 60-minute chart of DX. These are the US dollar futures. Simple stuff, you look for, just like with stocks or anything else, I like to sniff out these divergent lows. You start seeing positive divergence building, that's bullish, higher highs or higher lows on the indicators against lower lows and prices. And as I always say, divergence is not a buy or sell signal. It's an indication of a trend reversal that it's likely to come. And your buy signal comes on a breakout above a well-defined resistance level, such as this downtrend line. So that gives you, starts a new uptrend, which we've been in for a while in the dollar, and that's been putting some pressure on gold. Although gold, to its credit, has held the key support I've highlighted on the daily chart for months, or actually maybe even years now. Yeah, actually it's been years. Then we put in the dollar recently on the 60-minute time frame, put in a divergent high right there and broke this bearish rising wedge right here, and has been stair-stepping lower since. So that helps to sometimes these lines just seem to disappear. Let's get rid of that. And there it is, negative divergence, stair-stepping lower, dollar probably first support coming up on. If you want to, and I do this by the way, guys, you could, obviously you know this if you already trade currencies, you can use this same analysis to trade the dollar or the euro if that's your thing. And I'll give you a couple other levels here. Yeah, minor support there. There's some downside targets. We do have a previous reaction high right about where the dollar is now. Right there, that previous reaction high. So if we can get down through there, it should open up the door to these downside targets there. Okay, that's how the dollar looks on the 60-minute time frame, and should this continue to play out. And there are some near-term targets. The euro is basically like looking at the dollar in reverse. That's E7 euro futures, whereas you had the divergent low right here on this day, or back here, up right there. It's early January. You had that divergent low in the dollar. You had a divergent high in the euro right here, and that was followed by a breakdown when the dollar broke above that downtrend line I showed you a minute ago. The euro broke below its comparable uptrend line, triggering a sell signal and setting off this downtrend right here, which I believe has recently ended because we came full circle, and just like we had a bearish rising wedge right there confirmed with negative divergences in the euro, we have a bullish falling wedge in the euro confirmed with positive divergences and a breakout. So there's our buy signal, and that's the euro. And there'll be stops along the way. You have these reactions here, but I think bigger picture, I have some even much longer targets, and let's just look at that real quick, and then we'll move on to the miners. All right, bigger picture is this: the EUR USD. That's the euro US dollar pair. We look at the weekly chart, and again, covered quite a bit recently, so I'm not going to go into too much detail, but there's our long-term downtrend line, going all the way back for well over a decade here, and we most recently broke out and back testing that trend line now. So should this back test be successful with so far we have a reversal, nice green candle, and the farther you get away from it, the better the odds are that that's it and it's a one and done back test. Now we could back test it for a few weeks, or longer. But again, take it for what it's worth. There's a back test, so that's an objective long entry for the euro, which is bearish for the dollar. Remember, when this goes up, the euro is rising against the dollar, and that's again bigger picture stuff. So maintaining the theory that this divergent low was the start of a new uptrend, and more importantly, again, we had some bear market rallies along the way in the euro in recent years, but what was different recently is we took out that long-term downtrend line, and that's pretty bullish. And we've also, if you notice this, put in a higher low back here, and that has the early makings of a potential uptrend or new bull market. What we need to do is take out this previous reaction high right here, and once that's done, then you're going to have the early makings of an uptrend, which are a series of higher lows and higher highs. So that's what we need to do, and it might take some time to do it, but we'll keep an eye on it. And should that continue to develop, start to pan out that scenario, again, that's going to be longer term bullish for gold, because you want to see to make a case for a bullish case for gold, you want to be able to make a bullish case for the euro, or a bearish case for the dollar. And of course, you can do USDOLR on TC2000. That's the dollar index right there. Same, basically looking at the euro in reverse. There's your bullish or positive divergences right there, leading into this recent low. And we've been moving higher since. Recently ran into resistance right there, and that's triggering this pullback, which I think will take us back at least here. So this is kind of near term. This is a daily chart. Remember, a minute ago we were looking at a weekly chart. So that's where I favor a little more downside here in the dollar at minimum to this point, and we'll see it. We'll see where we go from there. We'll see how the charts look, and see if it's worth booking any profits on any metals and miners, or sticking with that trade. And before I leave this, I do need to say that although it is the dollar and gold have a very high inverse correlation, meaning one goes up, the other goes down, there are times where that correlation disconnects. We've seen that in the past before. You can have a overwhelming demand for gold, more buying pressure that offsets the impact of a rising dollar. So it is completely possible. Maybe we only pull back to this near-term target here in the dollar and then rally up, and you could also see gold rally. So again, I include this analysis in the charts, all the better if we can make a longer term bearish case, which I just did with that euro US dollar chart, but not absolutely necessary. Again, we'll see how the charts of gold and the miners and all that look, and let's roll into that now. Let's just jump into GDX. Well, let's look at gold. I'm sorry, while we're here on the daily time frame. There's gold. There's my buy zone. I've had this long-standing buy zone for a while here. We hit the top of it there, had a nice rally, hit the top, rallied again, but then fell into the buy zone. Hit the bottom of the buy zone, which is solid support. Remember, the top of the zone I've always had listed as moderate support, and solid support on the bottom of the buy zone. And boom, boom. So far, the buyers have stepped in both times there, and that's how we're looking on the daily time frame. And they did so with positive or bullish divergences there. GC, gold futures, mentioned recently. Here's that same, this is the tag at the bottom of that buy zone on gold, GLD, the ETF, but we're looking at gold futures here, 60-minute chart, double bottom, equal lows with positive divergence there on the PPO, and we recently took out this downtrend line. You can bring it up from that high if you want that reaction high, and that's a breakout. We're coming up on resistance here, about 1760 or so would be our first near-term target for gold. But so far so good. The key is, I'm doing this video as a follow-up because we broke out and we back tested the trend line and we're moving higher. And now let's roll into the miners, because as I often say, if you get the call on gold right, the miners are going to follow, usually, with very few exceptions. About the only time I don't see the miners rallying when gold rallies is during very strong stock market sell-offs where gold is catching a flight to safety bid, but the miners, being that they are stocks or equities, at times can get sold down with the market. But again, it's pretty rare. I mean, you can go back here. I'll do this for you in just Let's go to this one, GDX. Let's compare it with gold. Edit chart properties, comparison, and instead of the S&P 500, we'll look at gold. Okay, so there it is. You can see here, and let me go to a daily chart or even weekly. You can go back all you want. This is GDX and gold. Gold's in purple there. So there it is. You can see the correlation is unmistakable. So let's go to look at GDX now. Okay, so when gold hit the bottom of that support slash buy zone recently, at the same time GDX hit it, and GDX also put in positive divergence there on both the RSI and the PPO, and since then we went on to break out, hit the first resistance, which is 34.48, had a pullback, which is normal to be expected on the initial tag of resistance, back tested the downtrend line, or the falling, this bullish wedge right here. Also double tested or retested that 31.33 support, just like we had very good support on gold there. We had very good support on GDX, and not by mere coincidence, obviously. And we move back up. So when we zoom in now, what we're looking at here is GDX is, I believe, on the verge of breaking out. And that's why I'm doing this video. Now I'm going to go over the individual miners. So on GDX, it's a little sloppy. You can see some trades, some candles to and through that line right there, about 34.50. Most importantly, or most recently, you have some reaction highs on there, and I think a breakout will spark a nice rally in the mining stocks. Now we're going to go through these, and I'm doing this for two reasons. I have a watch list of all the components. I'm showing 29 items in that watch list. I haven't verified this with GDX's website. You can do that, but these should be roughly up to date as far as the holdings within GDX. Again, this charting program will load the components of an ETF when I click on the watch list. And so here's what I'm going to do is go through these pretty quickly for two reasons. Number one, to make the case and show you what needs to happen to open the door for the next leg up in the miners, i.e. breakouts in these stocks as well as those levels I just mentioned on gold and GDX, but also as individual trade ideas. You tend to get more bang for your buck anytime if you're bullish on a sector. If you can sniff out the most bullish looking stocks within that sector, you can often outperform the sector. Now, for most traders, most investors, especially if you don't do this full time, for a living, and you work a job and it's hard to manage multiple positions because you don't want to pick one or two gold mining stocks. You can do that and you might hit a home run, but you also might strike out. You might pick the one dog within the whole sector. That's Murphy's Law. So that's why you diversify. If you're going to pick individual stocks, I'd say at least half a dozen names within the sector to be diversified. Or keep it simple and buy GDX. GDX is the gold mining ETF, or SIL for the silver miners. All right, so I'm going to go through these and again give you levels whether you want to trade these individually or just to make the case or highlight what will help the case for more upside in the miners. And there it is. There's the downtrend line. I'm just going to try to color the most salient levels here with this blue marking tool, and that would be it. So there's Newmont. And I'm going through, spend a little more time on this because this is one of the, if not the largest miner. It's it's a almost $50 billion company. So this is the 800-pound gorilla in the sector. And that's a pretty well-defined trend line. So I think if that pops, it's safe to say we'll see some buyers step in there. Almost divergence here on the PPO, slightly lower, almost an equal low there, and certainly positive divergence there on the RSI down below. So that's what Newmont looks like. I can give you targets, but I'm going to maintain the same views that I have and I've shared on gold recently. With gold stepping in to buy it at that key support level, I'm looking at the next leg up in a bull market potentially. And so more of a trend trade or a long-term swing trade, and right now just kind of let it go, let it run. You can target reaction highs, but I'm looking for a much larger upside, and not even concerned with where to take profits at this point in time. That may change if I see something, because I'm an active trader too. I wear both hats: investor, long-term investor, and also active trader. So sometimes I'll jump in and out. Like I mentioned back here a few weeks ago, I had this, and just looping back around, I know I'm all over the place here, but on the gold 60-minute chart, GC, I had pointed out this triangle, and I told you whichever way we break probably determine the next trend. We broke to the downside, and so I pulled the plug on gold. and I bought back in recently when the the charts were shaping up for a rally again at the bottom of that support zone. So that's active trader stuff. And that was just a near-term, pullback when we broke this triangle pattern there. Long-term, IRA positions, things like that, you can give it a little more room. So that's it. Let's move on to the rest, and I'm just going to rifle through these charts and show you the things that stand out on each of these. So that's Newmont. Next up is Barrick Gold Corp, and that symbol is GOLD. Can't imagine how many newbies come in and type in buy the symbol GOLD, thinking they're buying gold instead of a gold mining stock. But there it is. Nice divergent low, common theme on a lot of these. Oversold there, so no RSI divergence, but we had the PPO divergence. And here, again, the common theme is the downtrend line. We had a little pop there, but other than that, a lot of reactions along the way recently, so I think that's a valid trend line. And we just broke above it. Pretty good resistance coming up here, about 22.13. Could be a near-term target, or where you break at that level to add to a position, and that probably opened the door to move up to about 25.67. And again, case can be made longer term, just like gold. I believe these guys are in a bull market that started back just like gold in late 2015. And say what you want about it, but you can't really knock that. The move has been, since that low in 2015, this stock has rallied about 450%, and it has made a series of higher lows there, and it's made higher highs. So this will open the door and take a break above those recent that previous reaction high. This is a weekly time frame we're looking at. That will further validate the fact that gold, or Barrick Gold, at least this gold mining stock, is in a uptrend. So, but there it is, near-term bullish breakout right there. Next up, FNV, Franco-Nevada Corp, downtrend line number 1. Lots of reactions there. Again, sometimes I'll exclude these little, I'll call them, aberrant spikes, or just brief pops that you fall back down in there. And if that's the case, because we have lots of reactions, I mean dozens and dozens of candlestick reactions on there. And then when you zoom in nice and tight, you see we broke out, back tested it. We also had price resistance, and that's why the breakout didn't go too far. It broke out, but ran right into that 124-ish price resistance. And so we back tested the trend line, and then boom, once we could take it out, that's what we did. And so I have a BOD trend line here, benefit of the doubt trend line. So far we've only had 2 reactions on there. If we get a pullback here, it'll give a 3rd reaction and help to validate that trend line, in which case then a break above the trend line would be bullish. Now if we go on and take it out now, then we've taken out that benefit of the doubt trend line, and that's also bullish because that's no longer resistance. And so there's another one that's looking constructive. This one always shows on my GDX list. It's 10x Genomics. I don't know why. It says Health Information Services. I'm surprised Worden Brothers, the company that runs the TC2000 platform, has not taken it out. So let's just move on. AEM is looking pretty good too. We have nice divergence right there, positive divergence. Stair stepping higher, and there's our downtrend line. So this one's got a way to go, and you can see some resistance coming in there above it. But again, constructive, putting in the divergent low, and it's going to move with gold. So either I'm right on the call on gold or I'm wrong. And if I'm right on the call on gold, these guys tend to give you more bang for your buck. In other words, the miners tend to go up more in percentage terms than gold when gold rallies. WPM, Wheaton Precious Metals, nice downtrend line there coming up on it after recently putting in the positive divergence or bullish divergence right there. Just like you'll see on most of these, we put in a divergent high right here, and that's when I mentioned closing out my long-term positions in gold, swing and trend positions, and in the mining stocks. That's when gold topped. And again, it's not mere coincidence. Gold had a correction, which I believe is a bull market correction, and I think the case can be made that that correction may be over now. And so time to reload for the next leg up. RGLD, that's Royal Gold. I could probably, yep, that's the trend line. I'll leave it as I had it right there. I think that's valid. Comes off the highs, another reaction there, more reactions here, and so recently a breakout and a back test. 113 is our big level. There it is, guys. So we're at it, testing it now. And again, this is a common theme as I'm going through these individual miners. I have almost all of them either currently testing resistance, such as a downtrend line or price resistance, or just recently breaking out above it. So a little more upside in the sector. You know, another 5-10% in GDX should do the trick to have all of these stocks breaking out above these current resistance levels. Again, those that are still testing it right now. Some have already taken it out, as I said. PAAS, it's Pan American Silver. Kind of, you know, this one's in a sideways range, but it tends to run, especially when gold and silver runs. And silver will usually follow gold as well, especially if the stock market holds up because of the little bit larger industrial applications for silver. Gold, you know, gets flight to safety, jewelry. They both have all those components, you know, jewelry components, industrial components, and even at times flight to safety. Or, and again, this has been my common theme for over a year now, is the inflation trade. You know, I've been very bullish on commodities, and you know, metals will typically move up in line with inflation as well. So there it is. There's probably a year-long sideways trading range. Upside break's going to be bullish, downside break's going to be bearish. Let's not make it any more complicated than that. AU, nice looking one right here. Here's one that just broke out. There's your downtrend line. There's a breakout right here after putting in a divergent low. So you have this little bullish falling wedge right there. Running into resistance. It's not super well defined. I would say it's more of a resistance zone because we have some reaction highs there. So there it is. So resistance runs from about 23.57 up to about 24.60, and should it put those levels in the rear view mirror, that's going to be bullish. Open the door to move up to about almost a $28 level. Pretty good resistance there, and there's a near-term target. To try to quantify it for you, that next target there is about 19% overhead. BVN, divergent low right there. I don't have a very well-defined trend line. This is the trend line I'm working off of right here. It's a long-term trend line, so we're quite a bit below it. And it could also be a near-term target. Actually, let me give you a target right here. That level should be lit up and identified about 1185 price resistance, and then the downtrend line. And again, you know, if I'm doing this video in a few weeks and we're here, even a couple months, then I'll be saying, well, that's resistance. And the next breakout above that resistance is going to be very bullish and probably open the door for a move up to maybe run at and take out the old highs there. KGC, downtrend line, nice and clean. Recent breakout, you can see the breakout right there. There's a breakout candle, nothing but green sticks so far, and positive divergence right here at the low, confirming the reversal. Reversal came just above that about $6 support right there, and so again, another one that's recently broken out. So you need to see, you know, that's the story. Again, some of these have broken out, quite a few haven't. They're testing resistance, as I like to say. Resistance is resistance until unless taken out. So if we can see more and more of those at resistance currently or near resistance, if we see more and more of those pop, it's just going to increase the odds that we get a nice rally. And remember, the miners, when they want to run, they can run, especially after periods of consolidation or when they're all coming up on key resistance levels and they all start breaking out at once. You don't want to, you know, be late to the party. Just a week or two, you might miss out on a 10-15% plus run in the sector. HL, yeah, not crazy about it. It's kind of just, this one's also grinding around in a big range for months now, but again, it's going to move with the sector. And well, like I said, I don't have a lot of levels marked up here. Just probably look at a break above that $7 level should be quite bullish and open the door for a run to new highs. BTG, this is B2 Gold Corp. Look at that nice looking setup right there. There's your downtrend line. You have numerous reactions along the way, including the one we're at now. We're testing that trend line now. positive divergence in place. We do have some price resistance just above about 488. So if it breaks out, and you can even swing it up there. It's still, that's about 6% just to get there from where we're at now. And then if that level goes, then that should open the door for a much bigger rally, and that's BTG. CDE is another one that's kind of stuck in the sideways trading range here, and same story. It needs to just take out those recent reaction highs from right here and here. This was that little pump. CDE is it's listed here as a gold mining stock. It's also a big silver miner as well. They do a lot of silver mining, and that's when that Reddit crowd tried to pump silver, and one day wonder, and it got faded. They tried to engineer a short squeeze on silver, and I gave my comments on it at the time, and it didn't work out for them. But that's where you see these candles up there like that on some of these, especially that have a higher output in silver, such as CDE. GFI, Goldfields Limited, same story. Big positive divergence recently. Testing resistance at 1046. Let's pop that, and that should open the door for the next leg up in GFI. AUY, Yamana Gold, positive divergence on the RSI right there. Price, resistance up about 483. Don't have a well-defined downtrend line, but again, one that should run with the group. EQX, this one has a downtrend line right here, positive divergence that it just put in right here on both indicators, and should add, let me give you a level right there, 934. That's price resistance, those reaction lows. And again, if this one can power on through both the trend line and the 934 level, it should be smooth sailing for another leg up. AGI, downtrend line needs to be taken out right there, positive divergence. PVG, just starting to crack, or actually just broke out, took out the downtrend line right here, and enough reactions to validate it. 1, 2, 3, 4, and boom, breakout right there. That's not a hard target, more of a soft target. Again, my thing right now is just if you like the sector, set some stops not too far below, because if these breakouts fail, that's going to be bearish. And if those that are at resistance that haven't yet broken out get rejected, you can run relatively tight stops or do the swing trade thing, trend trading. Continue to scale in and buy down to that resistance level, or I'm sorry, key support level on GLD on the gold daily chart, as well as GDX, and continue to scale into these stocks. Maybe they're not ready to run yet. I think they are. That's why I'm doing the video. At least I'm getting prepared for that. And if they don't, if they want to consolidate a little more, that's fine. As long as they all stay above their key support levels. Maybe the breakout, instead of coming now or this week, comes 3-4 weeks from now, or 3-4 months from now. But again, I wouldn't do the video. I try to do my videos and updates when they're timely. If I'm watching something that's ready to run, ready to break out, or currently breaking out in this case, like many of these individual miners. IAG, one that has yet to break out but getting close. There's your downtrend line, positive divergence, and yeah, I've maintained that target about 412 or so, $4 give or take, be your next upside target. That'd be a nice move, from where we're at right now. Stock's at 325, and it's also trying to take out this 323 resistance. We'll call that 325 resistance. That's where the stock is now. Let's just say that. Here's what I'm talking about. This level here, look at all those reactions right there. We broke it, tried to regain it. That was a one-day candle. We got there for a single day, but then boom, fell right back down below it, back tested, and lights out. And then finally we regained it here, bullish. Once we regained that resistance level, it acted as support on a pullback, acted as support on a pullback, support, 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 broke it once again, but we're trying to recover it. So again, it's a battleground right here between bulls and bears and IAG. So I really like this one because you have not one but two levels. Some eyes might be watching this downtrend line, some eyes might be watching that 325 level, and that's all the better. Different subsets of traders. The more that buy, the more that step into buy, the more that's going to cause, put buying pressure on the stock. If we break out, that is, stops should be hit on short sellers once that level's taken out, and the long should step in, and that would be a pretty nice run up to about 412. Let me try to measure it for you. Let's say I'm going to drop that line down to about $4. So we'll call it more of a target zone from about 4 to 412, and that would be run of about 25% if you get it. OR, another one kind of just doing its thing, grinding around. So not one of my favorites, but should go with the sector. SSRM, this guy can run. This one's also a high. It's listed as gold mining stock, but it also it's a silver miner as well. They do a lot of silver production. At least they used to. It used to be, my silver mining watch list. I don't know if anything's changed in recent years, but I do know the history of this stock. When it wants to run, it can really run. Trying to draw a downtrend line. I don't have a really clean one there, so let's just scrap that. Here's what I'm looking at right here. These recent reaction highs right here. So I think this one's on the verge of breaking out. There's 1, 2, 3. If we can pop that, we do have resistance about 1733, even bigger resistance. And if we take that out, that's going to be bullish. So those are your levels to watch. Buy signal number 1 on a break above. Pretty much where we're at now, about $15.94, we'll call it $16, then above $17.33. Positive divergence tells me that that's a likely scenario to see that breakout. NGD, same thing, bullish or positive divergence there. Could be the catalyst for the next leg up. AG, here's one that's just in an uptrend, and really it's been one of the stronger mining stocks. There's our first reaction, and lots of reactions along the way. So this is simple. This is, trading 101. You find a trend, buy pullbacks to the trend line. I don't have any negative divergence on it. We had that little, pump there. This is, again, a silver miner, but it's in GDX. GDX is, it's called the Gold Miners ETF, but a lot of these companies, they're digging in the ground, and if they're going to pull out gold, they're going to pull out silver. They're not going to leave it there. Some of these have a bigger, component of silver production than gold, but again, it's all components within GDX. And that's why you can buy GDX. If you want to just pure play on the silver miners, SIL is your ETF. I'll get to that one in a second. But if you go with GDX, you're getting broad-based exposure to the gold and silver mining sector. Here's a nice one, HMY, Harmony Gold. Look at that downtrend line, nice and clean. Breakout candles, everything you want to see. Big, impulsive, gap up, big solid green candle. Follow through today after the breakout, and it came after the stock put in a divergent low at support. And that's the common theme. This is where I mentioned, that last buy on gold and the mining stocks, and that was big support for Harmony. And so, again, things just breaking out of a multi-month downtrend line, so I'm not even focused on any near-term targets. Just kind of position in these guys, maybe continue to layer into them if and as the charts continue to firm up, or even if we had another jog back down to support again. I wouldn't like to see that. I'll have to say it. It wouldn't be great. It doesn't eliminate the case, but if we saw another jog down, more than just a back test of the trend line, then that would mean the breakout has failed. So see, we could back test. I'm trying to get an arrow tool here. Keep grabbing a circle tool. Back test, that's fine. Anything much more than that is going to mean a false breakout. And then, of course, if we take out the bottom, that recent reaction low, that color's turned down 378. It's not going to eliminate the bullish case, but it's not going to help it. And if we go much below that, we could have a little whipsaw down below 378. But let's just, for now, let's focus on the fact these guys have broken out. I'm getting ahead of myself. If they fail, I'll do an update. If a lot of these breakouts fail, I'll definitely update the miners. SAND, look at that nice clean downtrend line, nice bullish positive divergence building, breakout near back test, moving higher. Just needs to take out that previous reaction high right there from a couple weeks ago. Next target 777 and then 867. And those are also the next objective buy points, so if and when we take those resistance levels out. EGO downtrend line, nice support here, big support. So again, if the miners don't run now, you can continue to buy pullbacks to that 1025 level, just like you could buy pullbacks in gold down to the key support. It's not mere coincidence. A lot of these miners hit support right around the same time gold did, and so your objective long entries are on or near, coming close to that 1025 level, or on a breakout of the downtrend line here, which also gives you this nice ascending or descending triangle pattern. Okay, two more to go. SVM, and that one is nice divergent low, resistance 569, then 707, and then roughly $8. And last but not least, DRD Gold, and same story. This one has a divergent low right here, positive divergence on the indicators as it's been diverging. And this is a downtrend line I opted to go with. It just has one little false breakout or whipsaw there, but I think enough reactions to help validate it. 1, 2, 3, 4. We'll call that a reaction, even whipsaw. And boom, starting to just break out. 1, 2, 3. There's a breakout candle. It was impulsive in the fact it was a gap up. So don't, just because it's not a big candle, that's still a 3+% rally that day. And then nothing but green sticks since. So that's it, guys. That's the case to buy to be long the miners right now. And I think I already did that. Yes, I did show you GDX back at support recently, and then SIL. That's what the silver miners ETF looks like. Also a really nice setup. This was a support zone right here, and look at all those reactions. It was resistance, we broke it, rallied there, back test, back test, back test, back test, back test, just like gold. You want to buy this one down to, down around 39. You want it to remain above there, not go too far below. But it's already hit that level so many times. So like I said, I'm doing the video because these guys could be ready to run a little more upside, and it'll take out the downtrend line there. And again, targets, targets are really much higher than, you can focus on some of these near-term levels. I have a little yellow line here. I'll give you that level if you want to trade it. About 46 and change, a little bit over $46. So that would be the first target, and then about almost $51 right there. That's 50.89, and if we get there, that would be really big to see SIL take out, because this is just a multi-month trading range, and so a breakout would be quite bullish for the longer term. All right, let's wrap it up here. I'll get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.